Welcome back to Fast Market, everyone. Kevin Hinks and Kevin Green. Now it's time for our cash tag segment. I'd like to bring in the co-founder of LikeFolio.com, Mr. Andy Swan, to the show. He's going to talk about a name, Andy, that I just find fascinating. It is the specialty value retailer Five Below, and they sell knickknacks, right? And they have issues with China and tariffs. But Andy, the metric that they put out, or that's widely known, that they spend so little money to open one of their stores, and they make back their initial investment so quickly that here's the numbers, Andy. They started 366 stores at the end of 2014. They now have 1,771 stores in 44 states, Andy. The growth of this company is absurd, and why? Because growing works for them. They pay off these stores so easy. It's an amazing story, Andy.
Yeah, it is an amazing story. It's an amazing business model. Like you said, they can open up a new store really cheaply. Part of that is because, they have a really nimble business model in terms of, what they're going to offer. When you walk into Five Below, there's no way for you to know exactly what's going to be on the shelves. It's not a place you're going to go in and just find exactly what you need. It's more of a discovery process. And I think they're really executing extraordinarily well on kind of a turnaround plan that's winning over value-conscious shoppers, which is a basket that's growing by the day. As more and more people start to feel a little bit of a pinch from inflation and the economy overall, but they're able to blend that kind of value-conscious shopper with a bit of a premium feel discount experience. They're really threading the needle, I guess you could say. They're blending affordability with fun, which is key because, we've talked about on this show many times, the stores that have a difficult time that digital can't disrupt very well are the stores that offer an experience that you can only get in person. And a lot of times that means fun, discovery, etc. And Five Below is one of those that has really figured this out. And so when we look at web data for Five Below, it really led the stock price higher in a considerable way. We saw web visits surge nearly 20% year over year, well before the stock doubled from our bullish call in April. And you look at Five Below versus competitors in web visits, and it just shows us that this is a company that's winning over the consumer. They're trying to find out where a Five Below is. They're trying to find out what the hours are. They're trying to find out what might be on the shelves. And so interest in Five Below is growing. The company's executing on a really solid plan. And like you said, when it's time to grow, they have absolutely proven the ability to do so in a very, very fast and efficient manner. So that gives us confidence that as things move Five Below's ways away from a macro perspective, they'll be able to capitalize very quickly.
So, Andy, I hear that. If you look at the last 4 quarters, they've actually had contracting same-store sales growth. And then you're also looking at the same store, or the stores that are being open, that's also decelerating here. So it seems like that's the trend that's being projected out by analysts for the remainder of this year. So knowing that we are seeing that deceleration, which is a growth driver for this company here, how are they going to be able to manage some of the exposure that they have? 60% of their inventory comes from China in one way, shape, or form here. So it seems like they still have a lot of headwinds. And the growth story seems like it's actually slowing down for them, not only what we saw for the last 4 quarters, but what analysts are expecting for the next 4.
Yeah, there's definitely headwinds. I think there's policy headwinds are the biggest ones. And the problem with those, as we've seen over the past few months, is that you have no idea what those policy headwinds are going to do next. One day you think, tariffs are going to disrupt the entire global economy, and then the next day it's kind of like, just kidding, we're going to punt this for 90 days and figure it out then. And that seems to happen over and over again. So trying to figure that out, I'll leave to someone else. In terms of the deceleration of their growth, I think that's a somewhat natural with the number of stores that they're opening, the expansion that they've had. The same store sales numbers are definitely a little bit concerning, but again, I would fall back on this is a team and a company that has proven high levels of execution and extraordinary ability to be nimble during tough times. And so I think they may be, in order to satisfy their customer base and continue to grow their customer base, which we think foot traffic wise they are, they may be having to give up a little bit of revenue per visit in order to do that. And so I think that's the smart move. I think they're building a really loyal customer base that loves to walk in and just kind of see what they want that day and spend some of the money that's in their pocket. And, right now that might be down a little bit, more of a macroeconomic condition, I think, than specific to Five Below.
Andy, I'll give you some evidence of one of your theories that this is a well-managed company. There's a Five Below right near my house, and it was in a mall with a Home Depot. All of a sudden, one day I look, and it has moved from that mall to a Home Depot to a mall about a quarter mile away where there's all discount stores, where there's a Nordstrom Rack, where there's a DSW, where there's a Nike discount, where there's a TJX. All those discount stores is where they moved their franchise to. Such a smart move because all those shoppers are like-minded shoppers. And it seems like such a smart move by them to get out of a mall with, frankly, a home improvement retailer, into a discount type mall. I thought it was, when I noticed it with my eyes, I was like, what a smart move by them to move your product to where the people are going. The people that go to this mall, less than a mile from my house are all discount shoppers. Like I said, the focus there is a Nordstrom Rack. So these guys are making small micro moves that are improving the business. I'm sure that their business got better going to that discount mall, Andy.
Yeah, I think it's a good anecdote. And I think it kind of plays into from a location perspective, from a speed to build out perspective of new stores, or switching locations of stores like you're talking about to be in a more effective area. They're very good at that. They've proven that over and over again, that they can be very nimble in terms of where their store is, but they've also proven that they can be very nimble in terms of what is in their store. And so I think their high priorities, enhancing the customer experience of the brick and mortar locations. They're fending off online Temu type of stuff. Everybody thought Temu was going to take Five Below under, but what they missed is, people still like to walk into a store and discover something cool and new that they can get for $5 or $10. And that's not going away anytime soon. And neither is Five Below, because they have figured out how to do that. And it's one reason why in April, when all of the tariff stuff was happening, we put Five Below very much on our bullish radar and kind of pounded the table on it, because if any company that has extraordinarily high exposure to China, of those baskets of companies, Five Below is one of those with the most nimble ability to change its sourcing, change its product lineup, change its pricing. All of those things, Five Below is somewhat unpredictable to the customer, and that's part of what the customer likes about it. And so they have a unique ability to be reactive to the macroeconomic environment that a lot of other retailers simply don't have.
Changing the sail, adjusting your sail to navigate the choppy waters. Andy Swan, we appreciate you coming on as always, spending some time with a fascinating name, Five Below. Andy, have a great day.
Thank you.
All right, Kev, this stock has a high from April of 2023 of about 200.